Welcome back to Beyond the Headline, everyone. It's an exciting day to be here because I'm here with the founding partner of Kleiner Perkins' new Edge seed fund, Anjney Midha. Thank you so much for being here.
Thanks for having me.
Can we start out with your founding thesis for this? Because as you and I were just discussing, you're working on some pretty incredible stuff.
Sure. There were a couple of competing trends that I think led us to start Edge. The first being that the bulk of the areas that I was spending my time on at Kleiner Perkins were new emerging areas of technology that were early for Kleiner Perkins to write the kind of large investment checks we usually typically do. So I was on our venture team focusing on consumer and enterprise technologies. And a few of the emerging areas that I spend the bulk of my time on today, virtual reality, drones, blockchains, computer vision, these are all pretty early sectors, but we wanted a way to back founders even earlier than the stage that KP typically gets involved in a way that helps them out. So that's the first trend, finding a way to back great folks working on emerging cutting areas of technology. The second, I think, trend that I was observing in the venture capital industry is that more and more, the most important asset that a venture capital firm or group of investors brings to the founders we invest in is the incredible network we have. Whether that's talent, so engineers, designers, product managers, the kind of people you want to hire if you're a fast-growing company, whether that's other investors that can help you fill out your financing, and whether that's customers that we can introduce you to, all of those are part of this large network that venture capital firms build as a result of the partners they have inside the firm. And more, founders need access to this network at a speed and scale that we've never seen before. Recruiting is a great example of a problem that every early stage founder has to solve, but it's also an example of an environment that's never been harder to find great talent in, especially in the Valley where we are. You know, hiring great engineers for really small companies has never been more challenging, often because they're competing head to head with large internet giants that today have the kind of resources that very few other firms have, very few other companies have. So when I was thinking about what kind of a group would actually help founders out, we said software seems to be a really good way that helps people connect to great resources. I mean, those are the kind of companies we invest in every day, and we started specking out what would venture capital look like if the bulk of what we were doing to help founders was routed through great software instead of needing individual partners or humans to moderate and route those relationships. So that was the second trend. And the third trend we were seeing was essentially huge a change in sort of outcomes. So our realization was that if you can get involved with a company at the earliest stages that ends up transforming an entire sector, the outcomes are pretty much binary. And so we believe, essentially, if a company taking on a pretty bold technical risk can make that leap to solving that technical problem, there are certain kinds of businesses that end up changing the world. And when they do that, the economic outcomes are just huge. They're tremendous. And so we said more and more seed stage investing should look like a binary decision-making process where you have conviction in a team or not. And when you do have conviction in a team, placing speculative valuations on that company can actually be pretty meaningless at the stages that we invest in. And so these three trends ultimately led us to found Edge, and that's what Edge is today. It's a group of investors that spends part of their time investing in 6 areas: virtual reality, drones, computer vision, digital health, mobile marketplaces, and blockchains, and the rest of our time building software for the founders that we invest in. And there's a core group of us who spend our time that way, and then we also host a rotating team of engineers and designers in the Valley who help us ship the software for the founders we invest in. And lastly, the economics with which we invest in are pretty unique. I would say we have the most founder-friendly terms in the industry. We usually invest using uncapped notes with no pro rata rights or information seats information rights or board seats or governance clauses. We essentially believe in a team, and then we're in or we're not. And that was the quick story on how Edge was founded and how we spend our time today.
What has stood out to me since learning about what you guys are working on and following it is how committed you are to really being a partner for the founders, which is a lot of what you just shared. How have you seen their response been so far?
Well, early stage startups can use all the help they can get. Um, it's almost been never easier before in history to start a company. But growing a company, building it out into a very meaningful business is probably harder than it has been today in the software industry than ever before. For several reasons. One of them actually is a bit dual-edged sword, being the availability of capital today. The sheer amount of venture capital money out there chasing great companies has never been higher, in a way that means that we have a lot of other investors who can finance a company, but at the same time there's a lot of other competition for a company today as well, right? So it's easier to raise money, but there are a lot more companies raising money for the same kinds of problems you might be trying to solve. So we try to help folks out in a way that they may not be getting help from other venture groups. We often join financing rounds with that perspective, where we hope there are other venture firms that we know and respect joining us in partnering with a company. And that's when we get involved. We're lucky to be able to ship this great software because of the unique makeup of the team, where everyone here has an engineering background, ships software. But we also have a great network to rely on that Kleiner Perkins brings, because Kleiner Perkins is a 40-year-old venture capital firm with this amazing network. So we try to help founders as much as we can, and so far the reception has been give us as much as you can.
And it's not only on what you're helping them build and decisions, but you guys have office hours, so they can literally contact you and speak to you directly in a moment.
That's exactly true. One of the realizations we had early on was something that hasn't changed in almost 30 years in the venture capital industry is how partners, so how investors interact with their companies. That usually has been a very rate limited model. So you usually have a single partner who joins your board as an investor, and the founder and CEO usually mediates anything they need from the investing firm through that partner, which usually means there's a board meeting once a quarter, and two people are getting together in a room and talking about problems, and that's fine. But that really doesn't acknowledge the fact that there's a whole other team that can often help from direct relationships with the venture firm. So that's why we built Office Hours, which is an iPhone app that we initially launched just for our portfolio, where any engineer, designer, salesperson inside our portfolio company can just ping us directly. It's an integration right into our Slack channel. We're on Slack all the time, and it changed that fundamental way that the portfolio companies interact with investors, and the reception was so good we opened that out to the world, and we've been excited about the feedback we've gotten.
I think that's such a special way to really live your mission too. It's one thing to say we're here to help. It's another thing to respond right away and help someone out.
We've all been conditioned over the past 10 years to expect instant responses from the services we use every day. Whether you want your food on demand, you want a like on demand from your Facebook network, and building a company shouldn't be that much harder than all the other services you use. Investors are notoriously slow at getting back to founders, and we said, well, let's go fix that.
And I know that your past experiences raising capital back when you were in school have informed how you wanted to be different than what you went through. What are some of the core things that you knew right away you wanted to make a priority?
Oh, that's a doozy. I could go on for hours on that question, but when we were students at Stanford, Ronil and I, who was my co-founder and is now a partner here at Edge, we set out to raise a very small amount of money because we were tired of asking our parents to pay for our server costs, and we said we don't need a lot. We think we should be in a position to raise a little bit of money. We were at Stanford, using the computer science department. We knew several, we were on all the right groups, and we said, let's go raise a small amount of seed capital to just be able to hire a few folks, friends who've been helping us out and pay for our server costs. And that was by far the worst professional experience I've ever had. Our first meeting with a venture capitalist took us almost 2 months to set up. We had it down for a day, and then, an hour before we were supposed to meet, the investor's assistant emailed us saying, oh, by the way, he can't make it. And we said, okay, fine, these things happen, let's reschedule. And the next time he could make it was, 3 months out. And that's set this long, arduous journey in motion where we would meet with investors. It would take, we would show up and they would be half an hour late and they would be on their phones the entire time and barely pay attention to because, we were students. And at the end of it, they would go on about how they would build a company differently if they were us, even if they had never built a company before or have never done it as students. And there were a few times when we just, we were wondering what these folks were thinking. We eventually got tired and put the fundraising process on hold because our parents at the time, I remember, were trying to ask what was going on with our grades. And that a fundamental realization for me was how painful it is for a founder to raise money, especially from folks who've never been in their shoes before. So when we set out to build Edge, we said we want our investors we want to be the investors we would have wanted when we were raising money for our company. And that starts with we think of the way founders interact with us in almost the exact same terms that a founder should be thinking about their own customers. So we think about the venture capital process as having a user experience, having a UI and UX, and we want to make that UI and UX really beautiful for a founder. So that means, unlike a lot of other firms, we only take 30 minutes of a founder's time when we do a partner presentation. So the process for us from start to finish is usually one short 30 to 40 minute meeting between our entire team, which is pretty small. There's 3 of us on the investing team and the founding team. We then go straight into founder and customer references within 72 hours. Within 72 hours, we like to make a decision about whether we should be following up with this company or not. And I think that's the best part, is letting a company know as early as possible is the most you can do to be respectful of their time. I think we've always believed that a quick no is much better than a drawn out maybe, so that the founders can get on with building their companies and not be waiting around. And we can usually get through references pretty quickly. So it's atypical for us to not be able to finish the entire process within a week, which is in stark contrast to a lot of other firms where the diligence process can often drag on for many days and is pretty painful. And finally, I think at the end of that process is the actual term sheet you get from Edge, which I mentioned earlier is pretty founder friendly, uncapped note. It's a safe, it's pretty straightforward, and we've actually open sourced that note on our website, so anyone can go take a look at it. I think all of those are ways we want to not only just talk about how we're founder friendly, but actually put our money where our mouth is and show folks that we're very serious about being strong founder friendly investors.
I think that's huge, and especially for the markets that you're working in, because a lot of these founders are really working in uncharted territory. Not, I don't have a virtual reality headset. They're pioneering that. So in the next few years, I can. Let's talk about VR for a second. What's your favorite part about it?
My favorite part about VR is the promise of completely getting rid of distances. So every time a new product or service shows up on the landscape that can help eliminate distances, whether that's geographical distances, economic distances, spatial distances, time-based distances, information distances, it usually ends up changing society for the better. The tool we're using right now to chat and record this conversation is a great example of that. Video conferencing has allowed folks to build relationships across borders, build companies across borders, often talk in ways that weren't possible 50 years ago. And VR, I think, is the logical end of that spectrum. VR promises the ultimate interface where you are completely eliminated from any barriers of distance between two people anywhere on the planet. That's the first promise I think I'm really excited about, for someone in any country to be sitting in the same virtual space, interacting in a way that just wasn't possible before. The second is a kind of selfish, almost philosophical excitement about VR. Is real life can be really substandard. If you look at modern life today, we often have to put up with the remnants of essentially legacy, right? This is the sort of the framework often used in software. Great software today that comes around often gets rid of a bunch of legacy, old remnant software from the 60s and 70s. Enterprise software is a great example, where Slack is an example of software that replaced legacy email systems inside large companies that really makes communicating much easier. In some sense, modern life can often be that way. if you look at the Bay Area as a great microcosm of this, the amount of time people spend on public transit in the Bay Area is incredible. Having to shuttle people back and forth between San Francisco and Palo Alto can often take anywhere between 1 and 2 hours a day. And there are thousands of people who do this on a daily basis, who live in San Francisco, work in Palo Alto, sit on a train for up to 2 hours of their lives. Spending 10% of your 20s on a train just doesn't seem like a good use of our lives. And good VR will actually be able to completely eliminate that need. Good VR will eliminate the need for you to put up with a bunch of different experiences that are suboptimal, that force us to put up with essentially remnants of past technology. Movie theaters are a great example of this. There's no reason that you have to go and stand in line and jostle next to other people and sit in there with hundreds of people on the first day of a movie. Watching your favorite Star Wars film shouldn't have to be an arduous process. It should be as simple as logging into your own personal IMAX theater in your home with your other friends, right? And it shouldn't have to cost you any more than a ticket, which can often be $20, $30 today. Actually, the entire VR setup I described to you on my planes is no more than a single movie ticket today. So those are probably the two most fundamental, overarching promise of VR that I'm excited about.
Anjney, as you work at, I think Edge is such a perfect name. I was just going to say the edge of all of these really incredible technologies that are to come. How do you stay current and learn so you can always be on your A game?
That's a great question. I think that goes back to how we spend our time. Unlike a lot of firms, we spend more time building software than we do investing. But we invest in software, that's what we do. There's a huge amount of overlap, it turns out, between trying to build software and understanding what other folks are building too. So, often I will, almost 2 weeks ago, put together a demo of a side VR project I was working on, because that allows me to be a better investor. So I think the best way to understand something is try to go build it yourself. And luckily, VR is a place today that you can do that for the first time as an individual developer. There are open source libraries that allow you to build your own virtual reality experience in less than an hour. There's some great projects coming out from folks like the Mozilla team, the Google Cardboard team, and I think that's the way I've chosen. Is it can lead to long nights of debugging code, but it does help me understand what our founders are building much better, I find.
And as you focus on that journey since you've been at Kleiner Perkins, what are some of your core learnings and inflection points?
That's a great question. I think the answer to that question will change depending on specifically which area of my job we're talking about. But I think the biggest resounding conclusion has been that the most important factor to a company's success is the team. A lot of people spend time on digging into the market size, the strategy of the team, how much money they've raised from other folks. All of those, I've learned as an investor, are ancillary to the founders of the company. It's not a coincidence that some of the most successful publicly traded companies today in technology are still led by founders. Google, Facebook, Amazon are all led by the initial founding team. There's something almost irreplaceable about the moral authority that a founder brings to the direction of a company. And I think that's been time and time again a realization in our seed, venture, and growth stage investments we've seen. Almost always the most crucial existential crises inside a company come when that dynamic is threatened, the founding relationship is threatened. So it's my job to make sure we find the best founders and nurture them and make sure that they're able to succeed.
I'm really glad you mentioned founders, because you hear a lot from investors that you're always looking to back the team. It's always about the individuals you're working with. But I wonder, what is it, Anjney, that really, when you're sitting down with someone you know that's the right team?
That's a great question. I think there's a lot of heuristics that people use, and often a great place to start. For me, I found a good heuristic is asking myself at the end of a meeting with a founder if I would personally want to work for this founder. Because actually you're solving several problems by asking that question. Probably the first one you're selecting for is whether you respect and want to work with this founder. Are you passionate about the things they're passionate about as an investor? The second is this person going to be able to hire an outstanding number of employees to help him execute on his vision, help him or her build an amazing team out? And I found usually asking that question can very quickly tell me whether we want to be involved with this founder, whether this founder is going to be a great company leader. And often getting the answer to that question can take a lot of time. There's always a short-term gut response to an individual. He or she might often have great interpersonal skills that lead to a charismatic first impression, but digging into their past history, talking to people they've worked for, people who have worked for them, can be usually the most compelling way to find out the quality of a founder.
When you look back on some of those meetings, what are some that you've been sitting there, especially in the areas you're working in, that you've just been like, oh my God, I can't believe this, I want to get involved?
Let's see, that's a good question. I'm going to refrain from naming any companies that I've invested in over the past 7 months, because those are all edge companies, and I want to give the founders the benefit of some more time before I reflect back on those meetings. I would say in recent memory, it was very clear to me when we sat down with Roni Abovitz. He was the founder of a company called Magic Leap based in Florida that we invested in last year. That was a very clear moment. Roni is a very accomplished founder. He built Mako, which is a surgical robotics company that he then sold to Stryker. Building robots that work with humans is really hard. And when the robot's job is to actually repair a human, that's incredibly hard. And sitting down with Roni and hearing about why he had already solved a much harder problem than what he's working on today, which is building the future of augmented reality, was a very clear moment when we knew we wanted to get involved. When I knew I wanted to get involved with this founder and company, and we did.
What gets you excited?
Changing the future. I think there's nothing more we could ask for than being able to shape the future we all live in, right? Not only for ourselves, but for all the other future generations. And I'm hoping that the areas we invest in, we believe will have transformative effects on the future of the world.
When you think about those areas, can you pick a couple and explain how you'd like to see in the ideal Anjney world things evolve?
Sure. I mean, I don't pretend to have a crystal ball. I think often actually the most revolutionary changes catch people by surprise. A few trends that we're seeing that would make me really happy in 20 years, for example, one of our digital focus areas is digital health. And I think it will be almost impossible for me, it's impossible to imagine a world 30 years from now where we don't have a constant insight into our bodies. We'll often, and I think in 30 years, humans will reflect on the 90s and 2000s and wonder how it was that we ever put up with the fact that we didn't know what the current, let's say, genetic composition of our bodies was, what the real-time density of your bloodstream was, what the components of other substances in your bloodstream were, how we weren't able to detect the flu 10 days before it actually stopped being dormant in our bodies, what our current rate of calorie consumption is, current rate of burn is. Everything about the human anatomy will be visible, I think. And those are companies we get really excited about that make that possible today. Not only for preemptive health, preventative health, but the ability to actually monitor what kinds of treatments work really well. We know surprisingly little, and that's something I learned during my training in bioinformatics at Stanford, was how limited our data sets are about the human body at scale. And that's something I'm excited about for my ideal future. When it comes to virtual reality, I think I'm beyond excited for a world where distances don't matter anymore, where your own personal reality is just one software parameter. Envelop is a great example of that company today. Wanting to work on multiple screens involves hundreds of dollars worth of purchases and desk space where you have to stack multiple monitors,
and a lot of neck strain.
And a lot of neck strain and a lot of moving pain. Moving around monitors is really hard, but there's no reason all of those problems can be solved with software. So let's say in 30 years, we'll know about our bodies, be spending more time with each other in virtual environments that are super friendly and tailored to each of ourselves. We will probably rely on autonomous robots like drones to execute a bulk of tasks like deliveries and monitoring that humans have to do, unfortunately, today, that are often long, painful jobs. San Francisco is a great example of where a number of early stage companies are tackling the delivery problem, and there's no reason a lot of those problems couldn't be solved by autonomous robots, and allow those people to work on things that are much more interesting in their lives, whether that's actually managing the robots, working with customers directly. So in an ideal world, I see artificial intelligence playing a much bigger role in our lives in helping humans solve tasks that we shouldn't be working on, spending less time crossing on distances, and spending more time in virtual VR environments, and knowing more about our bodies. Let's leave it at those three areas.
Well, I'll leave your team responsible for pioneering the future. As you think of your goals for Edge the next 12 months in 2016, what are you envisioning? What do you want to see happening?
Well, the short-term goal is to just back the best companies in each area. I think we still haven't made any investments in computer vision, in the blockchain, and we're always on the lookout. So by 2016, I'm excited for us to make an investment in each of those areas. And I'm also excited to map out the next set of focus areas for us. The incredible thing about technology is the edge, with no pun intended, is always a moving target. And I think for us to play an important role in backing the best founders who are building the future, the vision of the future changes on a yearly basis. So I wouldn't be surprised if we have another conversation in 2016 and we're talking about a new focus area like optogenetics or gene editing. That might become a renewed focus for us.
That is crazy, and I'm so excited that we have your team so committed to, really, you're right, edges. Now it sounds like a cliche, but being at the edge of that. I know you're very active with meeting new founders and wanting individuals who are working on these incredible projects to reach out to you. What's the best way to get in touch and stay up to date with everything you guys are working on?
Oh, in real time. That's why we build office hours, and it's incredible. We've had thousands of founders download an app and be talking to an investing partner in less than a minute. That's just never happened in history before, and that's super fun for us to engage with founders directly in Slack. It's like you're sitting across the table and having a conversation. So that's a great place to find us. We all spend 2 hours a week online in office hours, and we'll be spending even more time hosting different kinds of guests in office hours soon. And our emails on the site. We usually try to respond to most emails that reach out to us directly about our focus areas. And between that and office hours, folks can usually get to us.
All right. Well, thank you so much for sharing your work and doing all that you do.
My pleasure, Jenna. Thanks for having me.